Hello and welcome to the latest trades and tutorials video. This is Jeff Fish, president of MarketGauge.com, and in this video I want to show you the roadmap that you can use to trade the outside day pattern. Now the outside day pattern you can see on this chart of the Qs is when the market takes out a new high of the day, or I should say the most powerful ones, or when you make a new high for the move, which also means a new high from the prior day, and then you close under the prior day's low. Now this was a massive one in the Qs, and people at the time were pointing to this as a potential top. Well, whether you believe it was a potential top or not, there's a whole simple roadmap that you can apply to this particular pattern, so you know exactly what to expect, whether or not the market is respecting it, whether or not you should expect the market to fail at certain points or continue to break and turn and move higher like it's looks like it's going to do. So that's what I'm going to cover in this video. But now, if you're just finding us on YouTube, please subscribe to our channel. If you're finding us on Facebook, please like us. And as well, know that you can find more videos like this at our website at marketgauge.com/tutorials, and even more information if you follow us on Twitter at two different locations, at MarketGauge and at Market Minute. And finally, if you're not already watching this in HD, use the settings in the lower right hand corner so you can be seeing this as clearly as possible. All right, back to the important stuff. So let me just start with a black and white, as I like to call it. So let's call this the outside day and assume that this was the day before the outside day. And I'm going to keep this really simple. So the outside day closes below the prior day's low, and it also has a range that is above the prior day's high. So first of all, the outside day, yes, is bearish, but in order for it to confirm its bearishness and look for a down move, you want to make sure that it trades below the low of the outside day. Now, we're big advocates of the opening range, so we'd also like to see it break the opening range. That's more of a topic for another time. I want to keep this video really tight. So if it breaks down below there and continues to break down, then it's negative. However, too many people don't realize that there's certain levels that are going to be problematic and will tell you whether or not the stock, or in this case the market, is actually looking to move higher. So the first area to look for the market to have trouble is the low of the day before the inside day. So essentially this day's range is going to be really important going forward. All right, so expect that this low, and even better if it's a number of days, is going to create a resistance. If we start breaking above that resistance, then you're going to look for this level to be resistance. Right, and then finally, if it continues to break, then you're going to look for this level to be resistance, and that's what everybody will be focused on. And if it breaks that, it's up, and away. So now, how does that really help? Well, let's just take a look at some examples. Now that you know that you're going to look for this level to be either the level to roll over, or if it breaks it, then you've got a kind of a, I don't know about a clear shot, but then the next level you're going to focus on is this one. All right, so here's how it works. In the Qs, you can see that when the market tried to make its way back up, where did it stop? All right, got hung up right at the bottom of this level. The following day when it got through that, where did it stop? Right at that level. Now tomorrow, if it breaks out through here, it's really telling you that it's paused at these levels, but it wants to break higher. Now this is a natural level to expect it to roll over, but if it breaks out, and I'm not suggesting that it will roll over, but everybody's looking at this as the new high, so pretty much anything could happen up here. The key levels that people aren't focused on are the levels I'm telling you about, the prior day's highs and lows. So let's take a look at a couple of other stocks that have gone through this process. Amazon. All right, so Amazon, same day, made a new high, closed lower, looked really ugly, but it doesn't follow through, right? Opens lower but comes right back in. And here's the range we're going to focus on, and look at how that held it in. So from a more practical point of view, if you wanted to establish a range of how do I trade this, Well, when you see that it's 3 days of establishing that range, then you know if it can break here, you can start to look long. But until it does that, then you want to wait. All right. If you're looking, if you want to be more aggressive on the short side, then where do you look for the rollover to happen? Right there. Now, this lower open that happened across the whole market wasn't easy to catch, and nor would I try to catch it, but it doesn't, it breaks that level, but it can't follow through. And then, just as the pattern would suggest, as soon as it gets back over this level, it starts to move higher again in a real way. And then look at where this day's top is, right around the prior day's high. So today, when it breaks out over this level, it's telling you each one of these, it pauses, but then it breaks through. It wants to go through. All right. So when you know that these are the points that you need to watch out for, it makes trading a particular pattern. Now, we look at a lot of different patterns. In fact, we're going to do a webinar Thursday of this week on specific patterns that we use to identify stocks before the market opens to focus on. And for all these patterns, an outside day isn't even one of them. All these patterns, we know exactly how the market should trade to demonstrate that it's going in the direction that we want it to go in. Now, I'm looking at this from the standpoint of most people look at this as bearish and flipping it on its head and saying, yeah, it's bearish if it can't get through these levels. But when it does get through these levels, if there's a strong bullish trend, then each one of these levels becomes an opportunity to look for an early breakout before it gets all the way up to the top, right? And rather than buy it right into this level here, make sure that you're paying attention to the low of that prior day, because that's what's going to be significant. So let's take a look at Microsoft. So Microsoft, while it wasn't an all-time high, it took out the high of major consolidation and closed lower, just like everything else. But guess what? It never even went lower. And notice that once it came right back through this level without worrying about it, that level became the support. All right. So if you were looking at the following 2 days here, those levels were obvious support. And notice where it kind of got held up on both these days, the same level that I'm talking about. And then finally, the level that everybody's looking at, the high of the big day. And so tomorrow with Microsoft, that's going to be a big day or a big point to be watching. All right, but can you see how focusing on these levels that you really know ahead of time can really help you in identifying the key levels to look for either breakouts or reversals. In this case, they're all kind of breakouts and breaking through this what would otherwise, I think, be viewed as a very negative pattern. And it's not that negative. Hopefully now when you can see that if it's going to break through this level, it's weakened pattern. And then again, it stopped right at this level, right? So Netflix, again, going through that same pattern. So until it comes back down through this line, I would assume it's going to continue to move higher with little trouble through here. All right. Big picture here is that when you understand how a particular pattern generally affects the market, it makes it a lot easier to figure out where to put your stops, figure out what to expect, figure out what your risk should be, and in general, just know whether or not the market is actually acting the way you'd expect it to act. And that's just a much more relaxed way to trade. So I hope that helps. If you like this concept, I'll probably put a link to the Thursday webinar below this. If you are interested, check it out. And until next time, best wishes for your trading.